2026 is not going to be the kind of year that rewards average investing. If you want to stay ahead of the curve and ride the next wealth wave, then you need to prepare your portfolios now. If you would like to grow your portfolios intelligently and not emotionally, then stick with me for the next 3 minutes as I tell you 3 investment secrets for 2026 that you're not going to find with any brokers or news headlines. The first secret is that this decade does not belong just to technology. AI, robotics, machine learning, technology, these are themes that have dominated the investment discussions of 2025. Every investor is chasing these hot stocks in these sectors without realizing that it's not just about high growth, it's also about valuations. The smart money is already shifting into defensive themes and ideas. So you need to stay ahead of the curve and start looking for businesses that are spending on research and development. You need to look at businesses that have capex plans in place, that have earnings visibility and margin expansion on their side. These are long-term wealth creators, and there are plenty of them in the market if you look outside the popular choices. If you believe that themes create wealth but valuations are the only thing that can protect it, then you should check out the work that we are doing with our flagship portfolio management service, Solitaire. This brings us to the second investment secret for 2026, which is that discipline is a virtue. Now, if you're looking at news headlines, they're all going to tell you about how the industry has been consistent in its sipping journey, meaning investors are continuously increasing the amount that they're putting into SIPs. And in fact, today, over 20% of mutual fund AUM comes from SIPs. This is a phenomenal number, but beneath that headline number is a worrying trend, which is the SIP stoppage. When we look at the SIP stoppage numbers that came out in November, what stands out is that SIP stoppage is close to 75%. This is measured as the number of discontinued SIPs by the number of new SIPs registered. Now, if your number is less than 1, it means you're growing in terms of SIP count. And if your number is more than 1 or more than 100%, that means more SIPs are getting stopped rather than started. But what this tells us is that investors are not staying invested, which means you are interrupting your compounding journey. And this is something you need to take care of. Anybody who stays invested for the long run is likely to get time to do the heavy lifting in their portfolios. Any of us who are stopping our investments and switching them and changing or churning our portfolios frequently aren't really getting time to do the heavy lifting. One way to ensure that your SIPs stay on track no matter what is to plan and provide for them well in advance. So ensure that your short-term goals are provided for, make sure that you have enough money aside for emergencies and that you are well insured. Getting a proper financial plan in place could make sure that you are making the most out of your money and your investment. This brings us to our third secret, which is that you need to play it safe. Now, many of us have built aggressive portfolios over the last few years. In fact, most investors seem to have SIPs or investments running in small and mid caps, and these valuations have been supported more by flows than fundamentals. So there is a shaky foundation on which a lot of investment products have been built. So today is a good point for you to evaluate and play it a little bit safer. In fact, when we looked at some return data on 2-year SIPs, what stood out is that large caps have actually outperformed small caps as a category. Now, this is something which is food for thought because it means that you can actually take less risk and make better returns as long as you calibrate your risk and you choose the right avenues. So now it leaves us with one question to think about. What is the difference between a good portfolio and a great portfolio? And that boils down to portfolio strategy. If any of these insights resonated with you and you want a customized roadmap for 2026, comment roadmap to get in touch with us.